Hi, this is June from Turning Point Life Investment, and this is your market analysis for the week ending August 6, 2011. Okay, what a week. What a tremendous week to the downside. On Friday, it seems like the market might have put in a bottom around the 117 area. We had a pretty good recovery, nice recovery back to the 120 level. You can see how it closed just right at 120. Pretty important psychological level, I think. So the market is pretty stretched out, pretty oversold already, and the main question is, what kind of rebound are we going to get? Because we all know that the market more or less seemed like it's hitting that extreme level, but are we going to get some kind of a rebound, or is the market going to just kind of chop away sideways? Because it can also do that as well. You can see now that we are very far away from the moving averages. Okay, so again, right, you can only pull or stretch that rubber band so far. So the thing it needs to do is just kind of come back and touch this 20-day moving average. And the other thing that I mentioned is it can either snap back in a nice rebound, or it can just kind of chop away sideways. Both cases are very likely as well. But given the intensity of the sell-off, it's more than likely we can probably get that snapback rebound. If we're hopeful, maybe a retest of this broken trend line right here, which is around the 126 area. Okay, but that's being very hopeful. But other than that, I would think somewhere in the middle of this chaos around the 124 or 125 area could also make for a great target. Let's look at the VIX here. No surprise here. I mean, the VIX just really shot up. This is what extreme fear looks like, and it kind of reminds me back in 2008 when the VIX was up in the hundreds. So now we know that, okay, this is the reference high for the VIX. So this is the point where if the VIX ever comes down to this level again, we know that it's pretty extreme once again. So it's something to pay attention to, and the VIX is usually what I use for a relative measurement, not so much absolute value. But one last thing I want to show you guys is going into an hourly view with the S&P. The main thing here is this hourly moving average, and you can see this, the market, or S&P, SPY, whatever, has always been underneath this 20-hour moving average ever since it broke down from this level here. So if we can get above 20-hour moving average, then that means there's a good chance we can get a higher rebound, maybe back up to this 50-hour. So those are the two targets that I'll be looking for to see how the market behaves for the rebound here.